Hey guys, let's have a look at the S&P 500 this time. I got two charts for you, a 4-hour chart and a daily, and we hop into that daily right away here. So each candle represents one whole trading day, and to give you an orientation on that time frame, that is the 1st of October when that last rally started, all the way up to that all-time high on the 4th of January to 4817. And when you pay attention to these blue lines, it's a falling bullish Wolver wave wedge. It looks a bit funny, I know, but still it's a proper and valid bullish formation we have right now, and it worked until today quite well. That is a starting point here, that low of October. That was our second point, that all-time high, and then what we need is a lower low compared to this one. So that condition was met, and then we need a lower high, which happened around here. So that condition was also met, and then it needs to be followed by a third touch on that line. In other words, we just need a lower low than that last low we made. So that happened as well, and we overshot like 1, 2, 3 times, but that's totally fine. And then that thing fired to the upside. It reconfirmed that upper trend line very nicely with that low on the 18th of March, and it went all the way up here. And these things, they have a target line when you connect that starting point with that second touch on that upper trend line, and that runs presently at 4731. So I know that's an ambitious target, but just keep that in mind, that we might run all the way up there. And just to mention one more thing here, these lows we made here, here we have at 4195 that 23.6 retracement from that March low in 2020 all the way to that all-time high. And you know, the 23.6 is the smallest correction level we can make, and in the bull market, and if these lows hold, that is a very, very bullish correction, and that actually shows still that strength in that market. Just to mention that. And now let's have a closer look on these black numbers I put here. And that is just my count based on Elliott, and I consider this one here as at my starting point as wave 1, wave 2 to the downside, and now it's quite interesting what happened here on that third wave. You know, the third wave is usually the strongest, and also it should be the longest as well. And it usually hits that 161 extension from that first leg, and that was just missed out by a little bit. We just missed it out by like 8 or 9 points, that 161 retracement. Oh, extension, excuse me. And on that same level, we also had that 76.4 retracement at 4649. So that was missed out by a little bit as well. And now when you have a look on what's happening here in that little correction, it's starting to overlap, and it doesn't look by far not as strong as that move. So right now, I would still say we are in a kind of wave 4 to the downside right now. I'm not sure if this one is completed yet, but if it is, and we put on here like another extension, considering this one here, 100% of that first leg, because the fifth wave, the last wave, the last move to the upside, likes to be as long as the first one, and that gives us a target of 4764. And it also likes to be something in between the 100% of that wave or 61% of that third wave, which is 4758 right now. And keep in mind that it's based on these lows here, so they need to hold for these targets over here. If it runs a bit lower, which is still possible, these targets will change as well. Just keep that in mind. And what I like about that thing is that it actually meets quite well with our target line from that bullish Wolver wave wedge. So that actually fits quite nice. And we hop into a 4-hour time frame, and that will be exactly that little time window here, and we just get more candles and we will see another pattern in there. So just give me a sec to switch over. So here's that 4-hour time frame, and have a look on these red boxes. And what I want to show you is, you know, when you have these rallies, and this time it was that March rally we had, so that was a clear trend to the upside. At some point you expect something like this in form of a ABC, or it continues like this in a so-called bullish flag, and that's what's happening here right now. If these lows hold, we had a proper ABC correction in 3 waves to the downside. So this is the first leg, the A, this is a second leg as a B, and that's the third leg as a C. The C got that 100% target at 4,462, and it overshot here a little bit on Wednesday and Thursday. We made a so-called double bottom, and I was also mentioning that on Twitter. If these 2 lows, if they hold, there's a good chance that we jump up here again. Right now it doesn't really look like that the market wants to turn around yet, but you know, sometimes it's a bit tricky when they want to find a bottom. And so that's our 100% target of that ABC. That's actually, that condition is met. And what's also met is that we just hit that 38.2 retracement of that entire move up from March at 4,446. I mean, we missed it out by a little bit, by like 2 or 3 points, but that's good enough. So that gives us also a proper retracement as a correction. And now we don't really have a channel, but we have another bullish Wolver Wave wedge. And this one looks also quite nice. I mean, that target line is a bit steep, but it could still work. That trend line runs presently at 4,634. I would say as soon as we go through that trend line, there's a good chance that we hit that target line in the next week or 2. So that's my proper outlook for the S&P 500. I hope I helped you out with that a little bit. I wish you still a nice weekend, and if you give me a few more likes, and if I see that follower number jumping up on YouTube, I will probably make another video on the German DAX, a little longer one, or even the Dow Jones or Nasdaq. You can also leave me comments if you have any questions, and yeah, that's it. Have a great weekend, guys. Thanks.